Hello and welcome to CNBC-TV18 Earnings Corner. We're live from the TCS house, the headquarters of Tata Consultancy. They've just reported the first quarter of FY25 and prima facie it appears to be slightly ahead of street expectation. We don't have too many details, but the rupee revenue growth has come in at 2.2% sequentially. EBIT margins have fallen by about 130 basis points on a quarter-on-quarter basis. The street expectations were for a 150 basis points decline. The reason for the margin decline is a wage hike effective 1st of April. So this quarter, there is a full quarter impact of the employee increment. And TCS is one of the few companies which has announced a wage hike. Many of them have actually delayed it to the subsequent quarters. Because of this 135 basis points decline in the EBIT margins on a sequential basis, the company's profitability has taken a dip. Profits have come in at 12,040 crore, a decline of 1.6% on a quarter-on-quarter basis, but again, slightly better than the 3.5–4% that the street was anticipating. The net headcount, the key number that we always wait is the constant currency revenue growth on a quarter-on-quarter and on a year-on-year basis. So we still don't have that number, but the expectation was that there will be a little bit of an acceleration. Last quarter, we had a CC revenue growth or a constant currency revenue growth of 1.1%, but this time the expectation was that it will pick up to 1.5% because Q1 is a seasonally strong quarter. The company is executing on that BSNL deal and also some of the other deals that they had won last year. Last year was a bumper year in terms of deal wins. The company won deal wins in excess of $42 billion. So as they execute that, the revenue will accrue to the company in Q1 of FY25 and onwards. So that's the reason why we were expecting a pickup in revenue growth. But the question is, when the revenue number comes in, does it also show some evidence of a pickup or a recovery in discretionary spending? Because that has been lacking. There is a leakage of discretionary projects seen in their revenue quarter after quarter since the slowdown began. Some other internals, we're just awaiting. I think this time there is a headcount addition. The headcount has increased by 5,452. So after 3 consecutive successive quarters of the employee base declining for the company, this quarter there is an increase by about 5,500 on a quarter-on-quarter basis, and attrition for the company has further come down to 12.1%. This compares with 12.5%. In fact, it's now been, this would be the 6th consecutive quarter when the 12-month attrition for the company has declined. So that's another important, supply side internal. Some statements coming in from K. Krithivasan, CEO and Managing Director. He says, I'm pleased to report a strong start to the fiscal year with all-round growth across industries and markets. We are continuing to expand our client relations, create new capabilities in emerging tech, invest in innovation, and build a new AI-focused TCS. Samir Saksaria says, in spite of the usual impact of the annual wage increment in this quarter, we have delivered a strong operating margin, validating our efforts towards operational excellence. We remain focused on making the right investments on talent. Just trying to see if there has been, we still have the details of the constant currency revenue growth so far. Okay, we still don't have that number. Awaiting that. Sandeep is now with us on the show. Sandeep, the rupee numbers appear to be very slightly ahead of street expectations. The fact that the company this time has returned to adding to the employee headcount, there is an increase in the overall, employee bench strength. Does that indicate some pickup in demand?
Yes, good afternoon and thanks for having me on the show. So, Rima, while the numbers of constant currency are not there, but I can tell you, based on back calculation of number, it seems that constant currency growth is 1.7 to 1.8% at least, because the impact of cross currency, if you adjust that, then I think they will be reporting 1.7 to 1.8% constant currency growth at least, which is higher than what was anticipated by 40–50 basis points. Secondly, even on the margins, I think there is 10 to 20 basis beat versus street estimate. Remember, this was a wage hike quarter. So if you remember our conversation last week also, I said that this is the quarter where we will start seeing upgrades rather than downgrades. So I think this number, even if we don't have all the details, based on whatever detail we have, I think it is a big beat compared to what estimates were. And because of that, I think at least there will be some positive commentary and also some positive upgrade in analyst numbers from this quarter. That is the way I look at the numbers.
Okay, we have the constant currency year-on-year revenue growth, and that has come in at 4.4%. In the prior quarter, it was a 2.2% annual increase in the constant currency growth rate. This time it stands at 4.4. Don't have the quarter-on-quarter, but Sandeep, as you're saying, it should be at 1.7, 1.8%, doing the rough math. Do you think there will be any upgrades to the FY25 estimates based on what we've seen on the top line and on the margins?
See, in my top line, I am not sure whether there will be much upgrades because, it is a very large size company, and even if you upgrade the number by 1 or 2%, it doesn't move the needle. I think the big upgrade should be in the margins because the attrition is now 12%, which was pre-COVID level. And at that level, your margin will be should be 27%, and we are at 24.7. So I clearly see there will be 2-3% margin upgrade, which will be there on the street. And based on TCS sensitivity of EPS to margin, I see at least 10-12% EPS upgrade for TCS based on these numbers.
Okay. Fine. We also have Prakash Diwan with us on the show now. Prakash, the stock moved up towards the end, ended up with a gain of about 0.5%, and it's done well over the last fortnight, 1 month. Your thoughts on the numbers?
Good afternoon, Deepa. So I think we've gone into earnings with very low expectations as far as TCS is concerned. In fact, the expectation was that there would be some EBITDA softness given the wage hike and utilization levels and all. But what these numbers tell you, at least the first cut, seems that things aren't as bad as what the street was anticipating. And remember, if we are anticipating sequential growth in all the verticals, be it BFSI, and of course BFSI is a big piece, but if the other verticals also kind of start contributing decently enough, then there is an expectation build up that this would be probably the start of a bit of a change. As Sandeep also rightly said, it could build some expectation towards a favorable move. But I would believe the key thing to look at, the key positive that I have seen in this set of numbers that you discussed is the new hiring. I mean, finally, there is a semblance of anticipation of growth that the company probably has. So in spite of the wage hike, which typically this quarter always grapples with, they would be seeing some sort of a build up on utilization levels, and that's probably what they're preparing. And next quarter could probably be even much more higher in terms of quantum. So if that sets a favorable trend, then probably you have a re-rating that the stock would have some upgrades, which would probably give. It'll still be sketchy. I don't think it's a universal upgrade for everybody as yet. People like to wait to see different things. But the upgrade cycle is something which would probably begin if these margins improve, if attrition is low, and if the headcount starts inching higher with all the verticals contributing fairly balanced.
Okay, I'm just got a message that it's about 2.2% constant currency revenue growth, but I'm still trying to, get that confirmed with the company. But 2.2% constant currency revenue growth, if it comes through, it's much, much ahead of what the street was anticipating. This would have been the best that we've seen in the last 4 or 5 quarters, much ahead of street expectations, if indeed the constant currency revenue growth is close to 2.2%. Then there would definitely be upgrades, and it would be a strong start to the company. Sandeep, 2.2% constant currency revenue growth quarter on quarter.
Yeah, it is correct number. Rima, I did the calculation again. It has to be 2.1, 2.2. So because I was taking some little lesser on the rupee front for converting the cross currency, when I do that adjustment, now it is coming to 2.1. So it should be 2.1, something that range. I cannot say 2.2, but it has to be close to 2. And secondly, Rima, the most important thing you see in this number, last year, Q1, there was 23.2% kind of EBIT margin, and it ended at 24, 25, 26%. So from that perspective, if first quarter is 24.7, that is 150 basis point higher, we will definitely end this year at 27.5, 27, because attrition is so low and wage hike is behind. It means that, at least 10-12% EPS upgrade is minimum which should come tomorrow from most of the analysts. That is the way I look at it.
Okay, 10 to 12% EPS upgrade likely for TCS, but a 2.2% constant currency revenue growth means I think the shares are going to skyrocket, and even the rest of the industry, it's sending a very strong signal because no one on the street was anticipating this strong, a more than 2% kind of a revenue growth. 1.5% was pretty much the consensus, going up to 1.8, 1.9%, but a number above 2 is going to instill a lot of confidence in the street about the demand recovery, because the 2.2% constant currency revenue growth doesn't just imply good execution. It's giving you a hint that perhaps discretionary spending or the leakage that we had from discretionary projects, maybe that is coming to an end. But remember, there is also that BSNL deal which they're executing, and it's how much you execute on that BSNL deal in a particular quarter will also determine the kind of revenue inflow. So there is a big, large BSNL deal which the company will be executing over the next 4 quarters. How much of that flows through, how much you ramp up in 1 quarter will determine. But again, much higher than street expectations. There is a slight beat on the margin too. Margin compression at 130 basis points is slightly better than what the street was anticipating. Moshe is also joining in. Moshe, this time we don't have the deal wins. Typically, the press release always gives you the deal wins, the TCV. But this time, I think it's, the press release, at least I can't find it. But give us your initial thoughts on TCS's Q1 numbers.
Hey, Rima, good to be here. I would say one specific thing probably drove this sequential growth uptick. I would say the fact that finally we're starting to hear that the deal flow or the deal wins that we've seen in the past 12 to 18 months are starting to convert more consistently into revenue growth. We've heard that a couple of weeks ago when we spent some time in India. Remember, that was the biggest issue in my view for the industry, was that you had this disparity between deal wins that were very strong and revenue growth was actually pretty weak. And it seems that some of those deals that were signed 12 to 18 months ago maybe took some time to materialize or convert because your typical enterprise company took a second look at those deals and maybe they got tweaked a bit. And maybe some of these started to incorporate Gen AI related productivity improvements. So that took some time. And remember, not every company in the space has that exposure to what we call cost takeout deals. So I think that should favor some of the others that had those large deal wins. And we'll start seeing that sequential growth that we started to see at TCS.
What would be the key questions, Moshe, that you would have when we get chatting with the management at the press conference at 5:30? What would you want to know from them, hear from them?
Yeah. So one, is the discretionary spending actually picking up, or this is predominantly a function of those deals that are starting to convert? That's number one. Number two, hiring, is that maybe reaching trough levels and we should start seeing a pickup there? Other things to focus on, obviously the Gen AI kind of related bookings. How are these impacting demand in general? Are these having a disruptive impact on revenue growth in terms of cannibalization? And there's a lot of questions on whether Gen AI is impacting growth for the space. And then the last thing that I think is also important is, how are we seeing the impact of GCCs on industry growth? Is that also kind of impacting growth, just given the fact that GCCs have grown so much in the past, what I would say 12 months or so in terms of headcount?
Okay. Thank you, gentlemen, for joining in. Sandeep, Prakash and Moshe. TCS has reported their numbers, a slight beat on the revenue and margins. It's a good start to the fiscal year for India's largest IT company, TCS. Also this time, the supply side dynamics are looking better, while attrition continues to moderate and has come in at 12.1%. After 3 quarters, the company has also gone out and hired more than 5,000 employees on a sequential basis, also a positive sign. Okay, we're going to quickly take your leave, but we will continue to pour over the TCS numbers. The press conference with the management is also scheduled at 5:30 p.m. But after the short break is our very special exclusive conversation with the RBI governor. So don't go anywhere.